What's going on, guys, and welcome back to another video. So with 28 of my 31 stocks within my Trading212 portfolio currently in the green, today I want to focus on the 3 that are in the red, and I'm going to discuss 2 of those that I'm going to buy further this week to help dollar cost average. So on Thursday I get paid my wages, and after I put my money away for my house savings, wedding, rent, etc., I plan to put about €400 further into this Trading212 account. So besides dollar cost averaging into 2 of these stocks, there is other reasons as well that I'm going to discuss in today's video of why I'm buying in further into those stocks / ETFs. And with all that being said, let's dive right on over to Trading212. So as it stands, we have 31 stocks / ETFs and 28 are currently in the green, so I'm quite happy with how the portfolio is going at the moment. We can see on the left here that we currently have €7,944 invested. We're up €914 or about 13%. So as we already did my weekly Trading212 portfolio update a few days back, I'm not going to go into detail today, but if you do want to stop at any given time and see what companies are in each of these portfolio pies in terms of sectors, you can feel free to stop the video if you do so. So at the moment, communication services is up 30.6%, consumer discretionary is up 2%, consumer staples is up 2.5%. If we keep going down here, energy is currently up 14.8%, ETFs is up 16.6%, financials is doing quite well, up 31.5%, healthcare is up 9%, industrials up 16%, we have nothing in materials at the moment, penny stocks is up 9.5%, real estate up 5.8%, and finally, my largest holding at the moment is technology, up 14.1%. As I was saying, there's currently 3 stocks / ETFs overall within the portfolio in the red, and the first of those being P&G, which is currently down 1.1%, and because it's only down to 1.1%, and the other 2 stocks / ETFs that I'm discussing today are down a lot more than that, we're going to disregard P&G for this week and just leave it alone, as it's only down about 1%, so that's pretty much nothing. Usually I prefer to wait until it's down at least 3% or more before further dollar cost averaging. So for that reason, we're going to leave P&G and focus on the other 2 today. So the first stock I'm buying a lot more of this week is Tesla. We currently only have about a half a share or 0.54 of a share, which equates to about €298 or so. We're currently down 8.4% or €27. We can see on the right here then at the bottom that we're actually down about 9.9% within the stock itself. However, FX impact for once is actually positive for us, so we're up about 1.5% due to FX impact. So overall we're down about 8.4%. And there's a few reasons really why I want to further invest within Tesla. So the first reason is probably quite obvious, and it's due to their share price. So one of the main premises of this channel is to dollar cost average and take advantage of stocks that I already hold that are down in value. So long term, the kind of hope is that they'll go back to their fair value price, effectively give me a better overall profit because I got a better average, or should I say a cheaper average price. So at the moment, my average price for this stock is $725. We can see it's currently trading at about 665. So effectively by me buying more of this share, now again we only have about half a share at the moment, but if let's say I double that, this would effectively drag down my average price a fair bit because I'll be doubling my position, and would give me a better and cheaper overall average cost. The second reason why I'm buying more of this stock, and again you need to do your own due diligence, you shouldn't really follow anyone, especially even the top kind of dogs in the industry such as Cathie Woods, even though she says it's going up a lot more. So we can see she's predicting that by 2025 Tesla's share price will be at $3,000. Now you obviously need to do your own due diligence as it's your money you're investing, but like when kind of the top dogs, as I said, such as Cathie Wood from ARK Invest, make these bold predictions, this even drives up the price anyway because of the hype generated by news such as this. It's also worth noting as well, this isn't obviously a penny stock, so it's not a kind of a pump and dump scheme. This is definitely a big, stable, diversified stock such as Tesla, and it definitely is the way forward in my opinion. So people such as Cathie Woods wouldn't make these bold predictions unless they genuinely believed it was going to go through, because it could severely damage their reputation if, let's say, it was $500 in 2025 instead of $3,000. So these decisions or calls aren't made lightly, certainly by the bigger people within this community. That's kind of the main reasons why I'm investing further in Tesla. Firstly, again, due to their share price and getting in at a better dollar cost average. Second of all, Cathie Woods' bold statement of Tesla reaching $3,000 by 2025. And thirdly, and probably most importantly, is I believe in the company going forward in terms of the innovation, and certainly electric vehicles are certainly the way forward, and Tesla is definitely the market leader here. So there are the kind of three main points of why I'm investing further within the stock. Now the second holding is an ETF that I made numerous videos on in the past, and that is the iShares Global Clean Energy ETF. It's currently part of my energy sector pie here, which we're currently up 14.6%. Again, the old school style energy sectors are doing very well at the moment in the form of ExxonMobil, which is up 65.5%, and Chevron is currently up 42.4%. And I've made videos in the past stating that even though they're doing well at the moment, these old style stocks, I do believe going forward in the next 5 to 10 years that the likes of these clean energy stocks and this ETF in particular is going to be doing very well, and it's kind of going to leapfrog the old school style energy stocks. So at the moment we have just under 20 shares within this ETF. We are currently down 11.5%, or that equates to about 28 or 29 euro. We can see here my average price is £11.28. Again, this is on the London Stock Exchange, so it's all in US or GBP. So our current price is £9.71. So again, over the last few months, I've been slowly trickling in half a share or a share here and there. So again, our position is only €222 at the moment. But again, I'm slowly trickling in the funds. For example, there's no point in me putting all 400 into here on Thursday and then seeing the share price go down even more. So by slowly trickling in funds, it's very important to always have a cash reserve sitting on the sideline if you want the dollar cost average. The main things I like about this iShares Global Clean Energy ETF is that it's an ETF and it's not just holding one or two individual stocks, because clean energy, in my opinion, is still at its infant stage, so has a lot of progress to do and there's still a lot of risk involved with a lot of these companies. But over the next few years, this will iron itself out, in my opinion. And because there's a lot of different subsectors within clean energy, it's kind of handy to have your eggs in all, or your fingers in different baskets, so to speak, because different sectors within a subsector will react differently to different market conditions. So that's one of the main reasons why I like this ETF, is because it's diversified, and also it's not just one individual company you're banking on. For example here, Plug Power is currently their biggest position at the moment, and one of the main reasons why this ETF is down at the moment is because of Plug Power and their kind of errors in their financial accounting. So that will see them seek penalties, and they could have a lot of reputable damage going down the line as well. But in my opinion, this ETF long term will probably switch Plug Power out from its top holding and slowly get the other companies that are fairly good, in my opinion, up to higher positions within this ETF. So long term, I still have a lot of potential, in my opinion, for this ETF. And if anything, I'm going to just buy more. If this ETF continues to fall, I'll keep buying more and more at the dip. Again, over the long term, this will give me a cheaper dollar cost average and hopefully a better overall profit. So that's my investing plan for the week ahead. Again, I'll be putting €400 into my portfolio on Thursday, and we'll probably use 150 to 200 of that to invest further into Tesla and the iShares Global Clean Energy ETF. Again, we stated my reasons throughout this video on why I'm further investing into these. So if this helped you in any way, shape or form, it'd be much appreciated as always if you consider subscribing to the channel. And if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much. That's the end of today's video and I will see you all tomorrow.